Your ultimate pit stop, Piston Pundit, where engines meet insight and the road ahead is never boring. What if the next global crisis doesn't come from Wall Street or Beijing, but from an EV factory in Detroit? Trump's 104% tariff strike on China just triggered a global chain reaction. Investment freezes, rare earth chokeholds, and a crumbling EV supply chain. Japan's ditching US debt, Canada's walking out, and the EU's loading its own tariffs. This isn't just a trade war, it's a full-blown economic reboot. Here are the 5 shocks steering the future of EVs and global stability off course. Shock number 5. China slams the brakes on US investments, an economic gut punch. In a bold escalation, China has hit the brakes on all outbound investments into the US, citing rising political risk and a need to protect national assets. This freeze, ordered by the State Administration of Foreign Exchange, cuts off billions in capital, much of it once fueling American tech, real estate, and the auto industry. Wall Street didn't take it lightly. The Dow tanked 1,700 points in 2 days. Tech giants like Apple and Tesla stumbled, but for EV makers, the impact could be brutal. Chinese capital has been crucial to US-based battery R&D, factory development, and mineral supply partnerships. This isn't just about cash, it's a power move. China's signaling the end of economic interdependence. With over 60% control of global rare earth supply, they hold the keys to critical EV components. For US automakers, that means looming delays, cost spikes, and a scramble to find new partners. What was once a symbiotic trade lane is now a geopolitical war zone, and EVs are caught in the middle. But the shockwaves don't stop in Beijing. Tokyo has its own message, and it's written in dollars and debt. Shock number 4. Japan drops the Treasury bomb. EV tensions go financial. Japan, once America's most trusted financial ally, is now making waves, quietly offloading US Treasury bonds in response to Trump's aggressive EV tariffs. These duties, which hit as high as 104%, haven't just targeted China. Japanese automakers like Toyota, Honda, and Nissan are also in the blast zone. For Tokyo, this isn't just business, it's personal. After decades leading hybrid and EV innovation, Japan views the tariffs as a slap in the face. Their response? What analysts call the Treasury bomb. By reducing US debt holdings, Japan tightens the screws on America's borrowing power. Higher Treasury yields mean higher interest rates, a weaker dollar, and mounting inflation, all of which ripple into everything from groceries to EV supply chains. Worse, Japan's move could spark a trend. South Korea is reportedly reviewing its holdings, and India's increasing trade with ASEAN partners. This isn't just a tariff war anymore, it's financial warfare. And if Japan is ready to pull the plug on US debt, the question isn't what happens next, but who follows next. One answer might lie closer to home, north of the border, where a longtime ally is shifting lanes. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Shock number 3. Canada shifts gears, the end of North American harmony. In a sharp turn away from decades of cross-border cooperation, Canada is stepping back from its US trade alliance. Ottawa has escalated from symbolic gestures to major economic shifts, removing American products from shelves, canceling trade talks, and locking in fresh deals with Europe and Asia. What's fueling the split? Canada views Trump's EV tariffs not just as protectionism, but as a destabilizing blow. American-built EVs now face increased scrutiny at Canadian ports, disrupting the critical auto corridor that feeds factories in Michigan and Ohio. Meanwhile, provinces like Ontario and Quebec are leaning into partnerships with Hyundai, Kia, and European brands, building a future without relying on US supply chains. The economic contrast is glaring. While the US fights inflation and falling GDP, Canada is cruising ahead with 3.2% growth and strong market confidence. For EV makers, this is a strategic blow. Canada has long been a gateway to North America. If Ottawa fully pivots, US automakers could lose a key market and a critical trade ally in one clean break. And just when you think it couldn't get worse for American EVs, China tightens the screws where it hurts most, the mineral supply chain. Shock number 2. The rare earth chokehold, EVs on the brink. China's move to tighten rare earth exports may be the most consequential play yet in this economic standoff. These 17 metallic elements, especially neodymium and dysprosium, are essential for EV motors, semiconductors, and defense systems. With China controlling over 60% of the global supply, its grip on the tap is shaking up entire industries. For EV makers like Tesla, Rivian, and Lucid, the fallout is immediate. Tighter access means slower battery production, stalled assembly lines, and rising costs. Automakers are already adjusting prices, with some analysts predicting a 10 to 15% EV price hike in the coming months. While countries like Australia and the US offer alternative sources, building up mining and refining capacity could take years, slowed by environmental hurdles, funding issues, and local resistance. And it's not just EVs feeling the pressure. Everything from smartphones to fighter jets relies on these materials. But make no mistake, electric vehicles will feel it first and hardest. Unless the US quickly diversifies its rare earth supply chain, it risks losing serious ground in the global EV race. But rare earths are only part of the problem. The real threat? A global tariff spiral that's shaking the foundations of the entire economy. Shock number 1. The tariff domino effect. Recession in the rearview mirror? Trump's 104% tariff on Chinese imports has triggered a global economic chain reaction. China's immediate 34% retaliation was just the opening move. The EU's preparing 25% countermeasures, Canada's raising barriers, and developing nations are quietly pivoting trade away from the US. The fallout is fast and fierce. Jobless claims in the US have surged to 242,000. The Dow has dropped 7% in just 2 weeks. Retail giants like Amazon and Walmart are posting losses, while consumer confidence sinks to decade lows. The real estate market is wobbling. Higher mortgage rates, falling home sales, and climbing foreclosures. Small businesses, hit hard by input cost spikes and shipping disruptions, are folding. For EV makers, it's a worst-case scenario. Material costs are rising, supply chains are stalling, and buyer demand is drying up. Startups are especially at risk, and even established automakers are shelving EV plans. Globally, analysts warn of a US GDP contraction. Asian allies are shifting focus, and confidence in the dollar is wavering. This isn't a trade dispute anymore. It's a full-blown economic tremor. The US must choose, adapt fast or fall behind. The verdict: a new trade era is here. So here we are, at the end of a trade standoff that's torched old alliances and thrown global markets into disarray. China, Japan, and Canada have all pushed back, and now the US faces a critical fork in the road: evolve with new partners, or keep barreling down the path of protectionism. For EV makers, the stakes couldn't be higher. Rising costs, unstable supply chains, and shrinking demand are reshaping the road ahead. The choices made today will define who leads the charge in tomorrow's mobility game. But what do you think? Should the US keep pushing tariffs or back off? Can EV makers survive without China's minerals? Is the US falling behind in the global EV race? Would higher EV prices change your buying decision? Can the industry bounce back? Or is fragmentation the new normal? Let us know your take in the comments. We love hearing from fellow enthusiasts. And hey, if you haven't already, make sure to subscribe to Piston Pundit so you never miss the latest updates on the vehicles, trends, and technologies driving the future forward. Thanks for riding with us. Until next time, stay sharp, stay driven. You can now check out any of the videos on the screen. There's plenty more to explore.